Good morning, guys. Good day. How are you? A lot of new names. Very glad to see you today, guys. My name is Yordan. Glad to have you aboard. Yeah, that's all we care about, right? Stay away from the bad market conditions that are not paying you good based on your strategies. And then once the moment comes, boom, you hit. So now you understand why we are trying to teach the first lesson, which is try to protect your capital. If you learn how to protect and not trade and not lose when everyone else is losing, or at least when your strategy is not working or your method, then it's easy. Because when the market is moving, everyone can make money. The filter comes when the market is not moving and making ugly moves. That's the filter, the real one. Good morning, good day to everyone else. Feeling fantastic here. Thank you, guys. Hope you're doing also well or superb, maybe because it's Friday, weekend is almost here. So let's get to business. Well, guys, this week also rough for us, specifically for the strategies. Manual trading did pay very well on some of the pairs like Euro franc, Aussie dollar. All of the setups we were waiting for did provide fantastic moves. And from what I'm hearing, for some of the members inside the club also was very well, very good week, which is simply great because that's the bottom line, right? We're here to make money. So those are the results based on the strategies this week. Mixed results. We, after all, managed to end up in some small profits, a bit more than 1% here. So Triple B almost -1, Divergence almost +1, Gemini 0.5%, Scorpio -0.5%, Libra Gold slightly above 1, and SRS at break even. So let's go to the actual charts, see what we took, what we skipped. And if you have any questions regarding any of the strategies or setups, guys, please put your question in the chat. Okay, even if I don't answer immediately, I'll go back to it once I see it. So starting with SRS, this week began at 11th, which means basically we have very few trades for most of the strategies. And again, this is exactly what we just mentioned in the beginning. When there is no clear and clean setups, no one is forcing you to trade. Okay? If it's not there, it's not there. Don't force it. So starting with Aussie yen, sell setup. Okay, we said that our main direction is bearish. We are looking for bearish moves. There was one false break, and after this pullback afterwards, we went here and traded the breakout. Now for the new guys, what we are doing, guys, here is on Fridays, we summarize basically all of the strategies, the software strategies which we are using, all right, in these sessions. And we show basically how to trade them the best way, what are the best setups that we're looking for to trade. And that's why we don't have just a table that says plus minus, plus minus, plus minus. We actually created this amazing technology which takes screenshots upon opening and closing the trades. So once we take trades, we can go back and discuss here live with questions and everything, why the setup was taken or why a given setup would be skipped. So what does SRS do? It is a trend trading strategy, which means we're looking for a developed trend. And then we're looking for something very, very easy. We're looking for ABCD pattern or 1, 2, 3, 4, call it as you wish. Then we connect the dots and we're looking to sell, or if it's a down move and we're looking to buy, this is the setups that we're looking for. The most important part for this strategy is to remember that that's not a trend line. Okay, if the price makes something like that, this is not a trend line. Here is an example. Okay, this high did not break that high. For a trend line, according to our understandings and principles to be valid, you should see ABCD or 1, 2, 3, 4, where 4 is higher than 2. Okay, so in that given setup and situation right here, there was a trend line before that. There was also this trend line. It basically gave us some kind of special cycle here, okay? And the first one we did miss. Unfortunately, it was going to give better risk reward, but in fact, if you have a look here, that would have been a loss in reality, okay? So this time, luck on our side. That would have been a correct, valid entry by all means. So as I said, we got lucky, and this is right after the news here. The initial move down, it did provide a bearish momentum. So this is where we took advantage after the news, trading this ABCD or 1, 2, 3, 4 and the breakout. Now, if that was not right after the news going with some fundamental momentum, what would be the issue with this given setup, guys? What do you think? Do you see anything not so attractive? Peter, I didn't know that, to be honest. I didn't read the material. Sorry guys, can you hear me? Yeah, Khaled, sorry my friend, it must be you. Price was far away, long way from the trend line. I believe I tend to agree here, not sure if you mean the same thing, but for me that would be again also the same issue. Okay, the stop loss here in terms of pips, 15-minute chart, it's way too big. Okay, so unless we had the fundamentals in this immediate spike to the downside, I wouldn't go ahead and trade it. Okay, so the news in that case are the thing that tipped the scales towards an entry. If it was a regular day without any other extra confirmation, like in this case, I'll definitely skip it. Okay, this one definitely entry, yes. That one simply too wide. Okay, and naturally when you have the fundamentals and the initial momentum, you can expect strong pushes lower, which means any other opportunity after that, which we didn't really get, okay, is also an opportunity for us to go ahead and look for sales in this case when you have such momentum, guys. Okay, this is also very important to be mentioned. And that's about the first trade. One profit, two losses, which basically gives us the break-even. Pound Aussie, sell idea. Now here again, we're going after price action and the trend lines. So basically we had up move. Okay, that zone was broken. Price wanted to push further, but it failed. Okay, so for me this is very important. maybe even more important than this part. Why? Because after this amazing bullish momentum, for some reason the price turned down, and that means something. And this is where we need to listen. Once that happens, we have a classical corrective pattern, okay? And this is where we can go ahead and draw our trend lines. And I'm going to again mention the price action. Immediate strong push to the downside, slow move up. Classical trend corrective pattern. Then you're expecting continuations. Nothing more. Okay? Unfortunately, this one pushed higher. We did get this spike up, and this is where we got kicked out. The next one would be the Aussie, which also lost. Now, this is again a classical situation for me. First of all, you know that our direction is down. Second of all, you know that we were trending inside this bigger channel. So that's the situation right here, more or less on the higher time frames. And the entry comes around that zone, which means we're looking for down moves. The down moves did happen. However, this trade lost after all. Now, this is an aggressive entry by all means, even though this is still a correct 1, 2, 3, 4 or ABCD. It is definitely an aggressive entry. Why? Because, well, this one also pushed here with the 2 candles rule, so technically it's good. We cannot say it's not, but I believe you will agree with me that this is not the healthiest pullback we have seen, right? So what do we do here? We are going with the momentum. That's all. We are going with the current ongoing momentum. We have the direction, which is down also, and that's the only reason why we might be expecting the price to continue lower as well. It pushed lower. This is where the divergence did form, and unfortunately we got kicked out at stop loss for this trade as well. So that's more or less the idea for SRS. As we said, break even. Every method goes back to the beginning of last century and down. Interesting. I'm actually going to Google it and read about it, Peter. Thanks for the input. Sort of interesting because, you see, even without knowing these things, once you break your head too many times against the monitor, you kind of come to the same conclusions, right? We are not reinventing the wheel after so many years of trading. Well, I can easily say that more or less everything has been tried. Exactly. All right, let's see. Next one, Forex Triple B. What was the result here? Minus 0.82. So let's see what do we have. 11, this is where we began the week. Again, 3 trades only compared to the last week's. It does look like very few trades. And that's perfectly fine. Again, if it's not there, we're not forcing. So let's see, Dollar-Yen sell opportunity. What do we do with Triple B, guys? Very quickly introducing the system to all the new members. We are relying strongly and entirely on Bollinger Bands. Those are the 3 lines that you're seeing on the chart, for those of you who are not familiar with Bollingers. So basically on the higher time frame, we are looking for the price to be below or above the 20 MA. And also we're looking at the slope of 20 MA. So when we're selling, we want the price to be below 20 MA and the slope to be pointing downwards. When we're buying, we want the price to be above 20 MA and the slope to be pointing upwards. Once that's the case on the higher time frame, which you can see right here, in this white window preview of the higher time frame, we then look at the lower time frame. Okay, we're trading multiple time frame combination here. And according to the direction, we are looking for pullbacks. So let's say that we have bearish trend, okay, like in this case. Then once the price goes to the opposite band, which is the upper band, we want to see double waves and then look for attacks to sell. That's basically the idea. Okay. So the only thing as a human and manual trader we need to pay attention to in that case is to have a double wave before the attack. Everything else is placed by the software for you on the chart. As you can see, once the price enters the opposite band zone, you're going to get these rectangles showing you whether this is a sell zone or a buy zone, in which case will be on the opposite side with a different color. And basically you're looking for the entries. Of course, you do have dashboard on the right hand side, which is giving you some useful information such as risk reward, price within zone, etc, etc, etc. So before we get to the actual setup, let's check out the previous one. What do you think about this setup, guys? Is this a valid setup? Exactly, it is. Why? Because 20 MA on the hard time frame is moving lower. That's these dashes, those dashes right there. Price is below it, okay? And we're getting a pullback in terms of double waves. That's all we need to know. From this point on, we can go ahead and attack, okay? This setup, is that a valid setup? Well, technically, I believe we might go ahead and say this is a valid correction here, but in reality, I wouldn't really rely on that, okay? Because usually this is the first leg, and as you can see, we have correction and then we have second leg. All right, so now at that stage, that makes much more sense in terms of double waves, and this is where I would be looking to attack, which we in fact did. This time the stop was much lower. Okay, basically the price is very close to 20 MA. So purely speaking about risk reward, this trade does make sense. Our direction is down. Everything looks perfect. Peter, exactly. I would count this as one straight move as well. Okay, this is not a healthy correction. This is a healthy correction, right? This is a healthy correction. But such one candle stops, not my cup of tea. Yes, it was. It was. And we in fact did pay for that. But when you have three things saying you're going for down and your direction is down and the setup is technically correct, I believe in those situations it's worth the risk to go ahead and take it. But yeah, you're totally correct. The move up was strong. The move up was strong, and here we go. We did pay for that aggressiveness in this case. Okay. So that's about the dollar and Aussie dollar. Sell opportunity, which again comes in a bearish momentum, double wave up, a reasonable stop loss if you ask me. We had the previous moves down, which is also fantastic, and this is where we're looking to attack for the sells. We did, price pushed higher, and we got kicked out at stop loss in that situation as well. So again, Triple B minus almost 1% or so. Next one on the list, Forex Libra code. what do we have here? Plus 1%. Let's see how many trades do we have. 2 trades. Okay, and in that case, the risk-reward ratio saves us from losses, because in reality, what we are looking for is less than 50%, right? Win ratio in order to stay above. So the first attempt was on dollar franc, aggressive attempt that was also discussed in the live rooms, but if we start mixing it up with our analysis, then most of the times you're not going to get even one trade, all right? So that's why we're attacking dollar franc. We know we're looking for the buys, and the only problem here was that the price did bounce from the higher time frame range. However, according to the Libra rules, we do have a valid entry. First of all, fantastic push up, sweet. Okay. Second of all, this is where the initial false break was provided. And what does Libra code do, guys? We're looking for false breaks followed by breakouts. So basically, price is trying to create another low, okay, to continue the momentum lower. It fails, and as the price is moving up until here, if it continues lower, it will be downtrend, right? Like here, false break, continuation, false break, continuation, false break, and this time, instead of continuing lower after the false break, we actually create higher highs. Of course, with all the other features built into the software, we are looking for the trade opportunities, but that's the route. Okay, false break followed by breakout in the opposite direction, which suggests switch of the momentum or continuation, as we have in our case, because that's the impulsive move, that's the corrective move, and this is where we expect this correction to be over. And that's why after the breakout, we wait for some tiny pullbacks, and we are looking to attack the buys. So that's the idea behind dollar franc. It did push higher for some time, all right? Then it pushed again higher, but unfortunately it wasn't enough, I believe, by just a few pips to collect here the second target, because more or less that was what we were looking for, okay? Something like that. So a few pips miss, and boom, price moved lower, reaching the stop loss. Then the second trade was on Euro Aussie, short term, looking for the buy opportunities, as we said, and then later on we wanted to switch to sales. So this short term buy opportunity did pay off, which is fantastic. We had this momentum to the downside. Again, this is where we had Libra also, okay, the same principle, more or less. And after we created the initial first move up, okay, breaking highs, creating bullish momentum, reversing the trend, we actually start looking for buy opportunities, and this is where the first buy opportunity did appear. False break, breakout. Technically speaking, we do have some tiny range here. This is the 15-minute chart as well, which the price attempted to break lower and continue lower. And, well, those are actually triple top of some sort, but this is where we also got the breakout. Okay, so going for the buys makes a lot of sense in my opinion. What we are attacking again is the first, actually the second potential wave after some sort of reversal, or at least signs of reversal with these breakouts, pullbacks or consolidation, flat consolidation, and then looking for the buys. Okay, so that's pretty much the idea, and we got the targets reached. You do have videos, Khalid, inside, and you have webinars from Vladimir, yes. They do explain all these things and the basics, but I would strongly suggest you to go ahead. All these videos, Friday sessions, we currently have, I believe, over 50 maybe by now. So whatever strategy you're going to get, please go back and check out these videos. I'm sure that once you see 3, 4, 5 sessions for the given strategy, your understanding of what we are looking for will be much, much better. That's the whole point of doing these Friday sessions. Okay? Yes, there are. All right, so that's about Forex Libra. Divergence University, those are basically trades based on divergences. Okay, we got slightly below 1% here. And many times what we're looking for in divergence will be against the reports. Okay, so basically if the report is saying, I don't know, we're looking for sell, the divergence, the regular divergence entry will be a buy. Why? Because the current ongoing momentum is low, going down, right? And the divergence is actually aiming to catch the bottom of this bearish momentum and look here for the buys. Okay? Of course, when we are talking about hidden divergences, then we are attacking in the direction of the ongoing momentum, which means hidden divergences are going to be in the direction of the reports. So this is one small note that we should make clear, okay, because some guys are getting confused. You said look for buys, then you're selling. That's how divergences work, guys. Okay, the divergence is the very first soldier telling you, okay, we might be going for reversals here. Okay, so the divergence is the first attack, most aggressive one, but most rewarding one as well. And usually we start our attacks after we get confirmations for that reversal of some sort, okay, whatever that confirmation will be. But this is already too late when it comes to divergences. All right, so the fundamental of divergence is to actually spot the very, very beginning of the new trend, or at least deeper corrections to be provided. So let's see, again, two trades, pound, dollar, first one. This is where we got the buy. You know, our opinion, bearish, now looking for short-term pullbacks to the upside at that stage. Okay, we got here cycles, we got here some sort of bullish momentum that was created, and we concluded that this is most likely some sort of a channel or a flag consolidation pattern. All right, and that's where the divergence came into play. That's where the false break came into play. This is also where we get cycle on its own. Okay, right here, double wave correction. So everything starts to fit together. And in that case, actually, we are looking for the same direction together with the divergence. But let's say you're attacking divergence right here. Okay, that would be against the bears, right? So that's basically the difference that I'm trying to explain to you guys. So that's basically the logic here. For the cable, price pushed higher, fantastic. We collect 1 to 2 even before the actual high, which is good because sometimes if your target is right here, slightly above the highs, you might be getting into ranges, you might be getting into deeper waves, etc., which makes the setup a bit more aggressive. Okay. And sometimes you get Good tips on how to apply strategies. Tiat, what are you referring to? For the Friday sessions? Yeah, exactly. And I mean, we all learn together. Here we are meeting with people around the world. For example, here we go. We have Peter, who is absolute veteran when it comes to trading patterns. So all this knowledge at the same place, shared, discussed, makes us amazing traders and amazing community. Exactly. All right. That's about the winning one from the divergences. Then we have the dollar yen sell attack. Well, this one is a pity it lost, okay, because we were absolutely correct on the spot. You know what happened afterwards. Price did push lower, okay. All these analysis we did were amazing. Two waves were created here, okay. Those are the two waves. The divergence was also present, and we did attack the sell. Unfortunately, we got the spike before the actual move to the downside, which made us lose money instead of making money. But this is how trading works, guys. We need to have our protections and follow our rules. Okay, a few more questions. One moment. Is that template available to members for the divergences route? Yes, it is. How do you share a file if applicable? Well, you can do so by email or inside the Telegram groups. I don't think you can share files here. You're welcome. Root inside the members area, there is download section. If you have problems with that, please ping support and they will send it to you. Or just ping me in Telegram. I'm going to send it to you personally. No problem. You're welcome. All right. Crystal ball, do we have any trades here? I believe not. Yeah, no trades this week for Crystal. Gemini, next one on the list. 0.5% profit. Let's see what do we have, guys. Cadian, only one trade. Okay. And Gemini is also a unique system in a way. Why? Because the main idea behind Gemini strategy, guys, is that we are looking for identical candle patterns in pairs, okay? And if we see something, well, if the software sees something, now that is programmed, that looks identical by given requirements, okay, we are going to be attacking this candle pattern, okay? Cadian, we are looking for sell opportunities, so any of the buys should be disregarded. So we have a sell setup that appeared. That's the 4-hour chart right here. False break pattern, perfect. We are looking to sell. This is where the sell opportunity comes. And now I want you to notice also something else. First of all, price action, very important. Always look at the price action. We had this down move, breakout below lows, etc., etc. Momentum is here. Second of all, we had this kind of a double wave, okay, which also provided some sort of trendline breakout. Now we have this, okay, so we can say that there was momentum correction, and this correction is probably over. Trend line was broken, lower lows were created, last high of the correction is holding. Price is retesting this broken trend line. Okay, something like that. I can't draw it for some reason. But price is more or less retesting this trend line, holding here. And this is where we get the setup. Can we ask for anything more? Yes, we can. Gemini pattern to be stronger. Okay. it wasn't, but after you put the check marks on the list and you see that everything is screaming sell, I believe the aggressiveness in that case is worth the shot and worth the risk. Okay, and it paid. Here we go. It's perfect because the aggressive setup is looking for one-to-one risk reward alone. In that case, the one-to-one was even above this more, well, it's not a significant low, it's not a swing low or anything. This is where the swing is, but it's still pretty close to the current market price, which, as you can see, only after 3-4 candles managed to provide the profits. That's CAD-yen. So that's about Gemini, and then we, oops, not this one. What's beautiful face some other time. Forex Scorpio code, guys. Okay. Let's see. I believe we had only one trade here. Scorpio minus 0.5% almost. Cat franc. That was the only trade for this week, and this is what we got in fact. So what do we do with Scorpio? Again, we're looking for the direction on the higher time frames, 3 higher time frames from the current one. So in that case, we have 1 hour chart, and what we're looking for is 4 hour daily and weekly for direction. When you have 2 out of the 3 giving you the direction that you're trading at the moment, which means buys in that case, you have a moderate signal. Okay. Of course, cat franc is bullish more or less at that stage. So this signal comes right at the correct time, even though it did lose. Perfect ABCD pattern, if you ask me. What we are looking for in those situations, okay, is 1, 2, 3, 4, guys. The only thing which makes this pattern aggressive, and we did pay for that, okay, is that rule. And here we said that if we have a big range of 2 Scorpios, we don't want to be trading anything that's in between them. Okay? And to be honest, again, that was my mistake. I was reading the other price action. I was convinced we are going up here. Okay, simply because we had 2 false breaks. We had more or less some sort of bottom that was created. Perfect double wave down, so I did ignore this rule and I took the buy, which was obviously a mistake. Okay, and the price pushed lower. So that's in fact a good lesson, that whenever you're not listening to the rules, whenever you think you're smarter than the market, you pay for it. Okay, rules do come from statistics, and we are not smarter than the statistics. Maybe sometimes you get lucky, but again, statistically, you will be making a mistake. So that's basically all of the trades that we have taken this week, guys. Once again, tiny profit, 0.some%, which is after all good, because the total portfolio of all these strategies is moving up. And what we care about is not week-to-week results, not only one strategy to strategy results. We care about the whole box in the longer term. Are all these taken manually? Yes. Peter, I like this one. Tiat, it's not about being faster or slower. is just that this time we don't have many trades. And this week in general, the market was not moving much, so we didn't have too many updates to cover, only a few. And you know that I'm not digging deeper into the 5-minute chart and 15-minute charts. I'm sticking around daily 4-hour and 1-hour charts. Okay, very rarely I drop down to the 15 minutes. So if the market is not moving, we can't really update much, right? Peter, what do you mean 98% of the statistics are made up on the spot? Guys, do you have any questions about anything at that stage? Okay. All right, guys. Thank you for that. You two have a fantastic weekend. If anything, ping me on Telegram. If not, I'm going to see you next week. Bye for now.